Well, hello friends. This is Vijay Bhambwani, and I promised you I would make a podcast on what is dual pressure and what does it do to stocks, commodities, forex, or bonds. How is it caused? Why does it result often in upper and lower circuits in traded securities? Now, dual pressure is a phenomena when both buyers and short sellers turn eager buyers or sellers in the same direction, and this cumulative action of buyers and sellers results in double pressure on the price. Now, there is a very high probability of an upper or lower circuit being hit in that traded security. This podcast is all about whether such moves are a total surprise, are they a game of chance, or can they be anticipated in a quantifiable mathematical and statistical manner. Friends, before I proceed, a small request. We are a small self sufficient prop trading company and we offer no paid services at all. We have little or no domain expertise in digital marketing or advertising. We ask for our viewers and readers' help by sharing our work on your social media groups so as to help us to reach out to a wider audience. That and your word of mouth publicity would be a great help to us. Thank you in advance. Coming back to dual pressure. Can dual pressure or upper and lower circuits be caused by purely sentimental reasons, or is there something more predictable, quantifiable as well? Now, in this podcast, I'll share my point of view where I feel that dual pressure and upper and lower circuits in stocks, commodities are not just sentimental but also mathematically triggered, and therefore, any good statistical trading model should be able to give you a fairly good working probability of anticipating such a big move. A perfect example is my weekly column in Live Mint, which is India's first and only media column to offer statistical inputs to its readers. In my 4th December 2023 column, I wrote that the broader market would witness a short squeeze. A short squeeze is when bears are forced to cover their short sales in extreme distress, and the market might also see double pressure. I'm sharing a hyperlink to that article in the pinned comment below as well as in the description below this video. Use it as a study material for you to understand better as to how professional traders identify stock moves. I have always advocated that nothing happens in financial markets without a reason, and since these are financial markets, the reason is also always financial. There is no chance, fluke, or surprises in financial markets under normal circumstances. Now, in financial markets, forces of demand and supply determine which way the prices will head in the near term. Your snapquote window, as you can see on your screen right now, is the first line of sight to gauge which way the price is finding equilibrium. Now, this snapquote window pops up when you highlight a particular security on a desktop or a laptop trading terminal and click on F5. On majority of the trading terminals, the syntax or the command is F5. In the case of mobile phones and tablets, double-clicking the security or hard-pressing the security opens this window. As long as bidders, that are buyers, keep raising their buy limit orders to purchase any security at the prices offered by the sellers, the price is headed upwards. The reverse also holds true. As long as the sellers keep reducing their offer price and sell at whatever price the buyers want to buy, the price equilibrium is downwards. Now, this is the effect. Now, let's go and see what is the cause. In financial markets, the same rules apply as they do in forensic surgery. The theory of cause and effect to know how a deceased person died So, a forensic surgeon performs an autopsy, also known as a postmortem. He uses the cause and effect theory to arrive at the cause of death. A careful trader, similarly, dissects the statistical data that traders leave behind in numerical form as a footprint in the sands of digital marketplaces. Once you know how to dissect those digital marketplace numbers, you can perform your own autopsy on any particular market or a stock or commodity. In combat, and I consider trading nothing less than combat, and passive combat at that, because you remove the guns and bullets out of the equation and replace them with a mouse and keyboard. So, in combat, the biggest element to determine the outcome of a battle is often the element of surprise. You can achieve outstanding victories if you take your enemy by surprise. Similarly, in financial markets, big money often springs surprises on retail traders and relieves them of their capital. The build-up is slow and deliberate till the moment of surprise arrives. Can you spot this build-up while it is happening? Yes, I think so. And I'll show it to you on the price. It'll show up on the price, volumes, and MWPL, which is market wide position limits in these three readings. Smart money could be taking positions in the spot segment, in futures and or options. So we are supposed to stay vigilant and monitor all three segments. Note the overall market wide MWPL chart on your screen right now. What do you see? The fall after the expiry of the November derivative series was far smaller than all the previous post-expiry declines in the 20-week period. That told you that lots of open interest was getting rolled over on expiry in the November series. Also note how the high in the November series was higher than the October series. That further tells you that traders who could deploy bigger and more serious money were rolling over their trades in progressively bigger lots. When the election results in India were declared on 3rd of December 2023, there was a surprise in store for bulls. The BJP won in all three big states and triggered a short squeeze. A short squeeze is when short sellers or bears are forced to cover their shorts in distress because the prices are rising too fast. Now, just as I wrote in my live mint column, the short squeeze did occur on Monday and Tuesday, that is 4th and 5th of December. Bears suffered from the element of surprise, and since they have been counterparties to the bulls by selling to the bulls when bulls wanted to buy, the bears had a lot of open positions in their shorts which they had to cover in sheer distress. While surprise is an emotional element, it wasn't enough. There had to be a buildup of MWPL for the bears to be frightened about exiting in a hurry. Therefore, your formula should be emotion plus MWPL is equal to success. Now let's take a look at some big gaining stocks in the week ended 8th of December, because the markets opened with a bullish gap on 4th December and ended significantly higher. Now these stocks are Tata Power. As you can see the weekly chart on your screen, this counter gained 17.63%, went into an all-time high, and the stock price and the weekly chart is showing you the price as well as the MWPL. Not a single dip in the MWPL was seen in the last few weeks, in spite of the fact that there is supposed to be a routine post-expiry dip in MWPL across the board, including the Nifty. But Tata Power did not see any decline in MWPL, not even for expiry. What does it tell you? That tells you big money knew the price would rise and therefore they rolled over most of their buy positions in mass. Let's take a look at the second example here. LIC Housing Finance. Now this stock gained 8.38% on a week-on-week basis, the week which ended on 8th of December 2023. But The MWPL fell ever so slightly on expiry of November. Now, note here again, big money was confident the price would rise and therefore rolled over their long positions. Another stock, IRCTC. Now, this stock gained 6.49% on week basis, and the MWPL rose even in the week when expiry occurred for November, the derivative series. Just like Tata Power, the buying continued even during the expiry sessions and expiry week of November. And the price has risen even further along with MWPL post expiry. Here again, big money continued their buying momentum. Now you'll ask me, hey Vijay, what about delivery stocks? I have a solution there too. Now there's a mathematical solution for delivery based stocks as well. I want you to extract the delivery and the script wise delivery report from the NSE's website, and the link is given in the description as well as a pinned comment below. Now open the file in your browser. Either it could be Google Chrome, it could be Firefox, it could be Internet Explorer or Bing or whatever. This file does not open by itself. It's not a batch file, so you need to open it in a browser. Once you open the file, you will note the percentage delivery as a component of the entire traded turnover in the spot segment. The higher the percentage delivery given or taken of the total turnover, the higher is the buying conviction on this counter. If the price has been rising smartly in the previous days or weeks, and the delivery percentage is also rising, that reinforces the bullishness in the counter. Now, very high MWPL stocks, very high percentage spot segment delivery counters are your upper and lower circuit candidates along with dual pressure candidates. Do remember, we traders are brain warriors. We win or lose with our ideas, so let's keep them sharp and not rely on tips, rumors, grapevine, social media recommendations, but let's keep it real with data and scientific trading systems, just as the real smart big money does. Friends, I would request you to connect with me on my free Telegram channel, wherein I put all my research, my thoughts, my trading views, etc. on this free Telegram channel. Do make it a point to connect with me there. Especially helpful will be the daily, weekly, and monthly pivot levels that you will find on indices as well as commodity markets. Friends, before I end this podcast, a reminder to subscribe to my YouTube channel if you haven't already done so. In the comment segment, do let me know how you like this podcast and what you would want me to talk about in my next podcast. Also, like I reminded you, please help me reach out to fellow like-minded smart traders like yourselves by sharing my podcast with your friends and family. I thank you for your patience in being with me. Till we meet again in my next podcast, this is Vijay Bhambwani signing off for now. Have a very, very profitable day ahead. Bye-bye.